Hi, I'm Patu from freefincal. The NSE has launched a new midcap index, and most active midcap mutual funds may struggle to beat this index. Let's learn more about this index and why I think active funds will struggle. Before we begin, yesterday I announced that December 8th we will have our freefincal Bangalore meet, and the event is almost 75% full. There are only 25% more tickets. I think about 72, 73 people have registered so far. I'm looking at 100, maximum 125 or so kind of participation, and so tickets are filling up fast. Please book via the link in the description or in the first comment. Otherwise, it will run out soon. The tickets are transferable, so even if you buy now and if you're not able to attend later on, you can just give the ticket to a friend or a relative or anybody you want. So there's no problem there. So please plan ahead. Many of you want to know, who have registered or want to register, want to know, is there any basic material that is necessary to study, and so that what I talk or what Avinash or Srinivasan will talk will be more relevant. Yes, there is. I have an ebook called Mutual Fund FAQ. There are 100 essential questions that every investor should ask and answer before investing in mutual funds. This is available for free in the website. I will link it here. Please go through this and use it as some kind of reference base for coming to the talk. Of course, you don't need to read it, but still it will help, because this is not, I won't be starting with what is a mutual fund, what is a large cap fund, and so on. That's not I mean, this meeting is not for that. So fine. So let's get to the index. So this is called the Nifty Midcap 150 Quality 50 Index. So this is a strategic index or a factor-based index. That is, what they will do is they will use some kind of factor like low volatility, alpha, momentum, or in this case quality. I'll explain what that is, and build an index with it. So it's a mixture of active investing as well as passive investing. So they won't just use the free float market cap. So the Nifty Midcap 150 index, that is 150 stocks, or the middle 150 of the Nifty 500, is the universe of this factor-based index, and they will use, and this is based on the quality score. So 50 quality stocks from the Nifty Midcap will be chosen, and a quality stock is determined by the last fiscal year return on equity, the debt to equity, and the variation in the EPS growth. That is, the EPS growth should not vary too much. So equal weight is given to these three. So they will look at profitable companies that are being growing well, and they will calculate what is known as a Z-score. The Z-score is a measure of how much these companies are different from the average, and the 50 stocks with the highest Z-score will be used for constructing this index. The weightage in the index will be a mixture of the Z-score and the free float market cap. There are limits about, so maximum there will be a 5% limit, or 5 times the market cap, or 5 times the portfolio weight in the Nifty 150 index itself, and so on. There are several rules. There's a methodology document in the NSE. You can look at my article and see the link for that. So this is the performance of the Nifty Midcap Quality 50 Index since inception. Of course, much of this data is back tested. It's not real volatility based data. That is market trading volumes based data. And the Nifty Midcap 150 is also shown. That's in blue. The Nifty Quality 50 Index is in red, and it was comfortably bet. But please, one data point, you need to look for consistency. So there's not much of a history, so I can only find 300 or so 3-year data points, and over these 300 data points, the Quality 50 Index has outperformed the Nifty Midcap 150, and its volatility is also comfortably low. This is the rolling risk, and lower the line, lower the risk. So the red line, the Nifty Midcap 150, is on the top, and there is a significant departure, or at least a few percentage less volatile than the Quality 50 Index. Now the big problem is, now if I take 23 funds which are the active mid-cap funds in a mid-cap category, I take them and I compare every possible 5, 4, 3, 2, 1 year periods since April 2006, I find that 19 funds have a 5-year history, and only 2 of those 19 funds are able to beat this index more than 60% of the time. And that's a big problem. So which means that if I take 100 5-year returns, only two funds have bet the index, this quality 50 index, more than 60 of those times. So that's called a rolling return consistency. And over 4 years, it's the same thing. Only two funds are managed. Only the same two funds have managed 60% outperformance. Over 3 years, only one fund has managed a 60% outperformance. Over 2 years, only one. And again, over 1 year, two. Of course, this 1 and 2, there'll be a different funds. People want to know, what are those two funds? I want to know what is the use. Of course, if you want to know, you can buy the mutual fund screener. I will include this index. I'll try and include this index in the next screener. Then you can get it. I'm not sure if it is viable. Let me try. But what is the point in knowing what are those two funds? It won't help you. I mean, today they have a better performance. Tomorrow the performance will be different. So the point is that most active funds are going to have a difficult time beating this index. So there are unfortunately. So the question is, can active funds beat this NSE index? I don't think they can. Most of them cannot. Actually, practically almost all of them cannot. That's how it looks like based on the given data. Things may change with time, but there is no proper active, even normal mid-cap index in India. There is this Motilal Oswal index, but that's just too young. We have to find out how that fares, especially during a crash and so on. There are ETFs. There are at least 2 or 3 mid-cap ETFs, but they're low AUM. The NAV to price difference is not too bad because it is an active intermediary, at least in the ICICI case, as I was told on Twitter. But we have to still see how that goes and so on. So that's what I wanted to say. Today I have reviewed a Kotak Equity Opportunities Fund. Have a look at that as well. I'll make a video of that later on. Remember about the Bangalore Investor Meet. We will have a meet in Chennai as well. We will have it probably in December. I will let you know once the details are fixed. So, I'll catch you later.